Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 24th at about 2:30 p.m. Eastern. Well, technology stocks are dragging Wall Street's main indexes lower today on the back of China-U.S. tensions and fears over rising U.S. COVID-19 cases. This is putting the S&P 500 on track to erase all of its gains for the week. Hopefully not. Optimism about a potential coronavirus vaccine and fiscal stimulus package had helped the benchmark S&P 500 hit a 5-month high earlier this week. So that was good news. Let's go on now and look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking stock or the ETF that closely follows our S&P 500 index. Now, when I captured this chart today, the SPY was trading at $320.99 or about $32.09 on the S&P 500 itself. Now, you can definitely see here we've been just gradually inching up all week long. So you can see what I was talking about a second ago about giving up all those gains, darn it. Now the SPY is still trading above the red line, its 20-day moving average, and certainly above the green 50-day moving average and the black 200-day moving average. You can also see here how it is late in the afternoon. You can see how volume is even lower or at least barely equal to what we've been seeing all week. The MACD is just trending totally sideways here, sound asleep. The RSI came up, took a jab at hitting the overbought line and then fell down again. So a very narrow range day, a very sleepy day. The SPY, where it is right now, is still about 5% off of its all-time closing highs back here in February at 338.34. So still in an uptrend here. The SPY had used its 20-day moving average a lot for, we can call it a trend line. I'm not drawing a straight line very well myself here, but it had been using the red line as a pretty good trend line. Now, if the SPY does fall below the 20-day moving average, which is coming in at $316.64, should it fall below that, then we definitely want it to stay above the 50-day moving average. That's a very important line and a line that many institutional traders use to enter and exit trades. Obviously, above is good, below is bad. We've also got this 200-day moving average, which could act as some support here. We see prior support here down below 300, just below it. So we've got this 200-day moving average moving horizontally here. Could also offer a bit of price support, but all of this is potential, obviously not anything we can predict. So let's keep an eye on the 20 and the 50-day moving average in the coming week. Again, we're right smack dab in the middle of earnings season, so it should start, I know I promised this, but it should start getting more exciting here within the next few days and coming week. I'll tell you why on the next chart. Okay, our next chart here is one we haven't looked at in a long time, so that's a really good reason for looking at it now. This is the Invesco QQQ. Of course, the symbol is QQQ. This is the monthly chart of the Qs, or the cubes as we call them sometimes. It represents the NASDAQ 100. Now, you're used to looking at this with me on a daily chart, but I wanted to get a different vantage point. I wanted to see a longer term chart here for a lot of reasons that I'll go into. Now, as we can see here today, when I captured this chart, even though every candle represents a month, still today when I captured this chart, and we know it's July 24th, so we've got about a week to go, the QQQ is trading at $255.93. Now, we know just by looking at this chart that it made an all-time intraday high in July. It was actually July 20th. but it made it in July at $269.79. Now, if we look at the pullback, or worse than that, it was the real drawdown we saw, or plunge we could call it if we don't want to be polite, back in March. We can see that and that was on coronavirus, of course, that low went down here intraday in March to $164.93 on the Q. So from there, it rallied dramatically and actually rose between this low down here and this high up here. It vaulted up about 64% from here to here, practically without looking back. So there's nothing to complain about here. If there's anything to complain about, it's that the angle was very, very steep. Now, typically with our stocks, if we want a stock we want to stay in for a while, we want one that's trending higher at about a 45-degree angle. This angle is much more steep that you have here, and that may be cause for, even on a monthly chart, that may have cause for us checking our stops more than usual. As we look down here at the 14-month RSI, because everything on this chart is a monthly reading, not a daily reading, we can see that the RSI here, and we'll call this the RSI in the longer term because it's not a daily chart again, has risen back up into overbought territory. It's at 73. So that's something we want to look at. Now, the moving average you're seeing on this screen is a 12-month moving average, obviously a yearly moving average. I like to put it up to get perspective. We can see that 2017, 2018 were just fantastic, except into the end of 2018, which was pretty rowdy, moved down pretty dramatically. Then we know that the market, and a lot of that had to do on the trade agreement. Then the market started up again in 2019. If we want to draw a trend line, it's going to be a short-lived one to about there. And yes, I can draw through that candle, the bottom of that candle, of the shadow if I want to. So yeah, so we can see here that then this move straight up has been fantastic so far this month. Now, this candle will not be done until the last trading day of July. So far this month, we can see that it's come down off, price has come down off of its highs. The bears have managed to push it down. Now, again, we know that April, May, June, and of course this part of July have been bullish months. What's interesting to me is if you look at the length of the candles of each month here, you can see that April was a big rally month. The bulls were totally in control. No argument there. April, pretty much the same thing, but they couldn't push it up quite as high as they did in April. May, that was May. June is the next one, about the same distance here. And then July, a little shorter candle, and certainly at the moment pushed down. Now, to get information from this, look left on the chart. Note that the very nice uptrend that we have had, with few exceptions here, a bit into 2016. But notice that from 2008, and if you all remember that bear market, that was, it doesn't look like a bad one now, but it surely was when we were going through it, that financial bear market. Look at the candles here. Look how evenly, orderly, and how nicely they rise. Just kind of a nice walk through the park here into 2016. Then it really started to take off in 2016, fell down, as we know, moved back up again. That was 2018. Now look at the difference between the highs and lows. Look how much wider, or taller maybe I should call it, that these candles are than these back here that were just wandering up very, very nicely in a nice orderly manner above the moving average. This means that the bulls and bears are starting to argue. This means that at one point this month, or this year, and we remember it, The bears were able to push these monthly candles into wide ranges and close them lower than they opened, close it lower than they opened. So that was calm and nice. This is getting rowdy, and then it pushed way down and now way up. It's going to get rowdier. It's going to get rowdier. So while it's all positive and all good right now, and indeed we may continue in this uptrend, know that you want to be very, very wise about your stops. And please know that next week, in the coming week, earnings coming out are going to be the big dudes in the QQQ. It's going to be Apple, Amazon, AMD, Google, Facebook. All of those big momentum stocks are coming out with earnings, and they do have the power to toss the QQQ all over the place, up, down, sideways, and wherever else it has the power to take them. So that's why I want you to please keep your seatbelts fastened, keep your stops in place. It may be good news on some and not so much on others. And we want to be very, very careful if the market rockets too high to be wise and take some profits. And after that, please remember that once in a while the sidelines is not a bad place to be. Okay, so we'll go on now and look at our final chart. Our final chart today is the daily chart of the SPDR S&P Metals and Mining ETF. The XME is the symbol. The XME consists of 22 holdings. Some of the top holdings are Hecla Mining, Core Mining, Freeport-McMoRan, Royal Gold, and this XME is a nice SPDR ETF that has in it different kinds of metals, from industrial metals and mining to precious metals and mining. So this may be, if the QQQ starts down dramatically, and it looks kind of worn, or well, not worn out, but like it might get worn out. I might have to pause for a minute here in the next few weeks. We'll see. This might be another good place to hang out a little bit because of the components in it. So again, top components are Hecla Mining, Core Mining, Freeport-McMoRan, Royal Gold. That's just some of them. Now, the all-time high on the XME, and you can't see it here, of course, was back in June of 2008, and it was actually $96. So when I captured this chart today, the XME was trading at $23.02. Now, it's hitting its head on the 200-day, the black line, the 200-day moving average. The volume is decent at 1.3 million. What it's done here is it came down and hit its March lows, as did everybody else, down here below 14, down around 13 and change, then came up, made a slightly higher low, and then it took off. Except for this drop in May, the XME has pretty much walked up its 20-day moving average. It fell down in June, traded sideways, and then recently started up again. So by looking at this chart, we can say that the 50-day moving average from here up has drawn a pretty darn decent trend line for the XME. Now again today it's trading at $23.02, just below its 200-day moving average, which is coming in at $23.25. So what I'm going to do here, I'm going to keep an eye on the XME in the coming week. It is trading above, again, its 20-day moving average, which is coming in at 21.69, and its 50-day moving average, which is coming in at 21.39. It's in a nice uptrend here, walking up its 50-day moving average pretty nicely. It may pull back in the coming week, and I'll be all right with that. All I want it to do is I want it to stay above its 20 and 50-day moving average. So at the moment, you can simplify that by saying I want it to stay above, call it 2150 to make it easy. As long as it can stay above these two moving averages, and definitely the 50-day moving average, I may add some of the XME, some shares of that to my trading portfolio. Now, please know my goal here is to keep this for the longer term. This isn't a short-term trade for me, although it can be for you. It's got the volume, but it doesn't have a lot of volatility to it, and that's the reason I'm choosing it, actually. I'm kind of hiding out here. So if it stays positive in the coming week, I may add shares of the XME to my portfolio. My initial stop is going to be at 2120. That's below the 50-day moving average. Now, what I want it to do, though, and you may want to wait, I'm going to try maybe a little earlier, we'll see. But if you want to wait and see if it can climb up over its 200-day moving average, you could even add there or wait until it does that. So wait till it gets up over 23.25, maybe up to 23.40 or so. And then if it can climb up and over 24, and that's the prior high from back in here. It looks like the first part of June. If it can break that price resistance in June and move up to 24 and over it, I will probably add to my position at that time and definitely have my stop turned into a trailing stop. So if things get hectic next week and you want to look around, you may want to keep an eye on the XME. And now, before we go on to final thoughts, please know that for a limited time only, and I do mean limited, we are offering all of my popular training programs at a 20% discount. So if you want to discover all of my simple yet powerful strategies, I'm talking about swing trading, I'm talking about trend trading, I'm talking about 3 winning setups, I'm talking about 7 steps to successful training. All of these training programs, they are each and every one on sale now again for a 20% discount. These strategies are going to help you increase your gains quickly and easily. They are simple, they are straightforward, they are common sense strategies that you can learn. If you'd like to get that discount, simply go to the link on this screen, or even better, click on the orange button below and you can check it out. And now let's go on to final thoughts. You know, there was a reason I put that QQQ chart up, the monthly chart I put up a couple of charts ago to show to you, because if you ever look at weekly or monthly charts, this will definitely give you an advantage over the other traders who don't know to do it or how to do it. One of the best things you can do for yourself and your portfolio is spending a little time looking at longer term charts like weekly or monthly charts. And if you have any of my online training programs, you know that many times before you enter a trade, I will advise that you look at a longer term chart to get a true picture of what's going on. Now, you can think about it this way. Okay, think about this. Say you're at a small gathering. Of course, these days we can't refer to large gatherings with COVID-19 still around. But say you're at a small gathering, and say you meet a guy, maybe his name is Jim, and he seems really nice. Maybe he's in an occupation you'd like to know more about, or maybe he would be a good connection for you. So you ask a friend about him who says, yes, Jim's a great guy. He's got a wife and 3 kids, and he works at Cranky Software Company. Now, you have some information, but say you want more. Wouldn't it help if you knew his career, his background? Wouldn't it help if you knew if he was dependable, what kind of career he has? Maybe you even Google him to see if there's any write-ups about him, or Facebook or something. The point is, until you learn about his long-term history, you won't be able to get a clear picture of what he has done and what he is capable of. Now, looking at a long-term price chart is just the same. Until you look at a long-term chart, weekly or monthly, until you see how your target stock has acted in the past and where it is now in relation to the past, it may be really hard to tell if this is a good point for entry. And it may look great on a daily chart. Many times I've seen a setup on a daily chart and thought, this is awesome, I'm going in. Flipped to the monthly or the weekly chart and said, oh my gosh, I guess not. This is way overbought. I had no idea this is what happened, or I can see how disorderly this stock has been or could be, and so forth. You can also see longer term support and resistance that you can't see so much on daily charts. Is the RSI, if you look at that, is that overbought or oversold in the long term? Only a long-term chart can show you that. And you may be struck by how different a long-term chart looks than a daily chart. It's just like I might present myself today wearing t-shirt and a jeans, but if you'd known me longer, you know that I'm also capable of putting on a nice dress and doing my hair. So the more you know about the stock you're getting into, the better you are. When you enter, you need all the information in your corner that you can get so that you can make the best decision possible. And flipping to a weekly or a monthly chart will probably give you information you could not see again on a daily chart. You know what, guys? It takes 2 to 3 seconds, if that, to flip to a weekly or a monthly chart, and it could save you or make you a lot of money. Okay, if you want to become a consistently winning trader, please check out our 20% off sale on our simple yet powerful online trading programs that will help you increase your trading profits from now on. Just click on the button below. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market